Hi, I'd like to speak with you for just a minute about government shutdowns and how they impact investors. Earlier today, the Democrats and the Republicans ended the government shutdown that started on Saturday. And after all the drama that was caused and all the fear and all the news in the media, they reached an agreement to keep the government open until February 8th. Okay? But what happens on February 8th? Will the government find a lasting solution to the problem, or will we be back in the same boat? I can't say whether or not this is a thing of the past or the shutdown will happen again, but I can guarantee you that there will be government shutdowns going forward. So I wanted to take this opportunity to actually put the whole issue in perspective for you. So yeah, you'll understand it and you won't react emotionally, and you'll be able to make better decisions as a result. Now, usually or often, government shutdowns occur during the weekend and they are often resolved by Monday, and that's what happened this time. And according to LPL Financial, during the last 18 government shutdowns, stocks fell 56% of the time, but that drop was only 0.6%. That means they usually dropped less than about a little bit more than a half a percent, which isn't really too bad. It's no guarantee of the future, of course, but at least it doesn't mean that every time the government shuts down, we're looking at an investor or investment calamity. That's not the case, or it hasn't been historically. In fact, historically, it's been the opposite of that. Now, the last government shutdown, before the one we just had, it went on for 16 days, and it went on from the end of September through the middle of October of 2013. In that instance, stocks actually rose over 3%. But there were times when the market went in the other direction. In 1979, the government closed for 11 days under Jimmy Carter's presidency, and that cost the market 4.4% during that period. So, given this uncertainty, what should you do? First, understand that if you allow your investment decisions to be news driven, you take on a lot of risk. As frightening as certain current events may be, when you allow those events to drive your investments, you have to be right when you sell, and you also have to be right when you buy back in. And the odds of doing that well consistently are remote. And this is why most investors on their own dramatically underperform the overall market performance. And I read a recent study that you might find interesting. It showed that investors whose political party was out of favor, tend to react much more rashly with their investments than people who uh, support the party that's in office at the time. So if you're not a fan of what's going on politically, you might be more apt to make rash decisions, and I suggest that you don't do that. I suggest that you leave politics out of it. And while you're at that, ignore the news and the talking heads. Let the numbers tell you what's going on. In my experience, that's the best way to keep your investment strategy on track. And in turn, historically, again, according to my experience, that's the best way to achieve your long-term financial goals. If the government shuts down again, only non-essential services are impacted. You'll still get Social Security, and you'll probably get your Social Security checks on time. Other things like VA benefits, um, maybe a tax refund, those things might be delayed, but you will get paid. And if you're a federal employee, you're still going to get paid, but it may take you a little time to get that paycheck. The bottom line is government shutdowns, like other news events, are blown out of proportion by the news media because they want to capture your attention and they want you to buy their books and magazines and sell advertising space. But that can be very, very costly. So I'm encouraging you to ignore it. If you've got questions about what's going on, give me a ring. Remember, the market goes up and down, our investments go up and down. Just because some news event happens and there's a reaction in the market, it doesn't necessarily mean anything. But if you'd like to discuss this, please give me a call. I'd be delighted to sit down with you or talk on the phone. And send me an email. Let me know if you have any questions. Thanks.